Welcome to Matters Financial and Geopolitical from a Frontier. I hope the year's going well. Let me start with a photograph I took at 6 this morning of the crescent moon just outside my house. And I tweeted, "Good morning world, rise and shine." I didn't use a filter. International markets, as I said, the UK, in my view, remains a political conundrum. The recalcitrant Jeremy Corbyn refuses to pivot on Brexit and surge into 10 Downing Street on a youthquake wave. And the FT is reporting that Brexit is driving a wedge between Labour members and Jeremy Corbyn. He is at odds with the vast majority of Labour's membership on Brexit, according to a new poll of more than 1,000 party members. Mr. Corbyn, the Labour leader and a long-standing critic of the EU, believes the government should uphold the result of the 2016 EU referendum. But almost three-quarters of members want a second referendum to try to reverse Brexit, according to the research by YouGov. The findings are awkward because Corbyn seized the leadership of Labour in 2015, promising to give the party grassroots a whip hand over policy decisions. And this is the point and why I'm calling him recalcitrant, because he's fighting his own party, essentially, in this matter. No one is ready for a no-deal Brexit. This is Bloomberg in a very hard-hitting article. When Brexit negotiations paralyse and fewer than 100 days still left till the clock runs out. It's worth remembering that the UK government, despite its assurances, remains entirely unready for a no-deal exit from the European Union. Pretending otherwise helps no one. In recent weeks, the government has started making some frantic preparations. It has directed £2 billion to no-deal provisions, hired some 10,000 staffers, redeployed hundreds of civil servants to help short-handed departments. Rather alarmingly, it's also putting about 3,500 troops on standby. All this amounts to an expensive bluff. From the beginning, the government has tried to use the prospect of a chaotic exit as negotiating leverage. No deal is better than a bad deal, as Prime Minister Theresa May has said. It was never terribly convincing, not least because the UK was doing almost nothing to prepare for it. To pretend to get serious now with a mere 3 months to go is simply delusional. EU negotiators know full well that Britain would never accept the consequences of no deal, and these expensive preparations won't induce them into new concessions. It bears repeating that a New Deal exit would be a disaster. Overnight, customs and regulatory barriers would rise, licenses and approvals issued in Britain would no longer apply across the border, supply chains would freeze up, food distribution could break down, growth would crater, the pound could plummet, prices might soar, and unemployment could double. That's to say nothing of non-economic consequences. UK police could lose access to tools for tracking terrorists, British planes and pilots could be grounded, hospitals could run out of medicines, and garbage could pile up, not to mention dead bodies. A better approach to all of this would be honesty. The time for bluffing is up. No government could willingly accept a calamity on the scale of a no-deal Brexit. May should simply say so. If Parliament rejects a Brexit deal in January, which they will, as in all likelihood it will, she should push immediately to delay the Article 50 process and stop the countdown. That would allow time for either new elections or, far better, a second referendum that would let the public finally break this deadlock. To continue with Potemkin no-deal preparations will only compound the damage. Vast sums are being spent to sustain a delusion that isn't fooling anyone. Meanwhile, no progress is being made on more realistic options. And the clock ticks and ticks. Which is what I said when I said the UK remains a political conundrum. The recalcitrant Jeremy Corbyn refuses to pivot on Brexit and surge into 10 Downing Street on a youthquake wave. I also said in that article at the end of the year, the pound is not priced in a hard Brexit, nor has the euro. This is a 1-year chart of sterling. Last time I looked, 125.52, and it's a risk, although it fell sharply yesterday, of an asymmetric, a vicious asymmetric downside move. The Financial Times reported that Juncker was telling the UK to get its act together on Brexit. Prime Minister Theresa May came to Africa and danced in 2018, is still there like Jeffrey Boycott, and that of itself is an achievement. But we're now we're about to hit the wall here. The Australian dollar suffered some of the largest intraday falls in its history amidst a drought of liquidity and a cascade of computerized sales. At one point it was down 5% on the yen and almost 4% on the dollar, before clawing back much of the losses as trading calmed and humans took charge. Violent moves in the Australian dollar and Japanese yen this morning bear all the hallmarks of a flash crash, similar to that which befell the Kiwi in August 2015 and sterling in October 2016. Currency markets: euro dollar 113.60, dollar index 96.498, Japanese yen 106.87, Swiss franc 0.9860, the pound 125.47, the Aussie 0.6938, India rupee 17.4155, South Korean won 1128.395, Brazilian real firming 379.01, Egyptian pound 17.914, the rand back above 1450 at 14.5193. This is a chart of the dollar index via JS Blockland. We've come off a little bit off the top, but it gives you a good sense. And I remain bullish. I know I'm in a minority position. Maybe some folks jumped ship after yesterday's overnight price action. Euro dollar 113.60. It was very perky yesterday morning, got us above 115, but that was a false break higher. 10-year German Bund yields dropped like a stone to 15 basis points, the lowest level in 2 years. And this is a chart from JS Blockland of 30 years of German Bund yield returns. Have a look at that, it's quite interesting. Gold has been pretty strong December through January, 1288.3, but I think it's going to run out of steam right here, right now. Crude oil, $45.60 in New York. Brazilian stocks hit a fresh record high and the real jumped by more than 2% as investors galvanized by the new far-right populist president Bolsonaro's promise of economic revival. 2nd of January, I said in the case of the BRICS, Brazil was a big outperformer last year. China has rerouted a lot of its agri-demand in their direction as well. They have been a winner so far in the tariff war. However, I said, we have all noted how a bump can morph into a slump real quick. Just look at Trump, I said.